Okay, can you hear me now then? I'm so sorry, guys. Can you hear me now? A yes or a no? A yes or a no? I'm just relaxing in my bedroom, so can you hear me now? Come on, come on, come on, come on, come on, come on. I'm so sorry. So you mean all those time I've just been talking, nobody heard me? What? And funny enough, it's a check. You guys have been telling me to check my mic. I didn't even notice. Oh dear. I'm so sorry. So should I go over to what I said earlier? I said a lot of things. A lot of things. Oh my goodness. You just missed a lot of things. Okay. Let me see if I can go over them again. Can I try and go over them again? I'm so sorry, guys. Oh, so sorry. All right, let me try and go over what I said again. Yesterday trade. How many of you were on the yesterday trade with me? We had a loss on that trade. Do you remember? And I was trying to explain to you. So let's go to the chart, and I want to explain to you what actually happened. So what actually happened yesterday was this: we were putting our stop loss on where liquidity price was taking liquidity. On Euro USD, it was a very clear cut. Euro USD, this was the area we were looking to sell from. Our stop loss was there actually, and our stop loss was somewhere up here. And this week, this massive candle took us out. So we have this issue. And price still came to our direction, anticipated anyways. Remember, we anticipated, no, not this one, not this one. Sorry, not this trade. It's here. Sorry. We had a break of structure, right? We had a break of structure. I told you about a break of structure. And then this was the liquidity area. So this was a problem. Remember, I was telling you that there is another block I'm expecting them to react from. Another other block that I thought they will react from around this area. These were little other blocks I was looking at. This one and this one. So my stop loss was above here. That is where our stop loss was. Guess what they did? They took it out on this candle. And they came back down and went back higher to tap into the pre-market high, the pre-daily high of that market. That was a pre-market low, sorry. So that was a pre-low then. But look at what they did actually. It was this other block that they actually came for. They came for this other block. This imbalance needed to be completely filled, and which I didn't pay attention to. And guess what? This was liquidity. And we were putting our stop loss there. So again, it was not properly planned. But the directional bias was absolutely correct. We went to fundamental analysis. Remember, we went to ChatGTP. We asked ChatGTP to tell us what is the directional bias, and then we confirmed what ChatGTP said with our fundamental analysis. We also confirm it with our technical analysis. So it was actually in the direction of the goal, and that's the reason day trading is actually a very difficult thing for many people, because um, stop losses are really a difficult thing for many. Risk management and risk to reward ratio. Risk to reward ratio are major problems, because when we're looking at it, we were targeting 1 to 2. And for us to have 1 to 2 of the risk to reward ratio based on our target, we needed to have our stop loss in a particular place where we can get it. And guess what? It was on the liquidity. So price still came down as anticipated. Like I said, it came down to the level we wanted it to, and you can see that was a massive drop. Now let me give you a tip, because after the end of the day yesterday up to this morning, I needed to do what we call a review of what happened, why I had my losses yesterday, what was going on. I had to document what happened yesterday. Let me show you what I found out. You say, oh, didn't you know this before? Don't worry. That's the game. You keep learning. You keep improving. Now look at this. This is the current candle. This was the yesterday candle. Did you see how the yesterday candle ended up amazingly? Crazy, crazy. Remember, the candle was playing around here, all right? Still around here, came a little bit lower, and then was playing around here, playing around here. Guess what? This was the day of the we're looking at, the previous day. Okay? This was the candle. So if I was to do a kind of playback here, you notice this was what it was. This was a candle. Guess what? Price actually retraced. Let me just do a playback a little bit. Price actually retraced to 50 of the candle, the 50% of the candle before dropping. Wow, I didn't know that. So I thought that was not the case, but that was the case. Look at the previous day. Again, the previous day. You're learning something, learn good. Learn good. Price retrace again into 50. Into 50% of that candle before dropping. Yes, it's a bearish candle, it's a downtrend, but there is always a retracement back up. But not all the time. It doesn't happen all the time. Please note that it does not happen all the time. That is very important so that you don't get knocked out, because you are trading against the trend. But if you don't want to catch the retracement, you want to trade the retracement, you can wait for price to get to that levels for looking to look for a sell. Exactly what the price did there. Now today, this is the candle. Today, this is the candle. I'm expecting them to do the same. I'm expecting them to a little bit, at least. If they struggle to, then I know that okay, well, I get it. So let them rise up a little bit to 50, and I'll be looking for sell at that level. So I can literally buy to that level if I want, like a scalping. So I'm looking at the 15 minutes time frame now. So this is my condition. So I'm thinking price break above the structure, I'm going to look for a buy. So I'm going to get my TP at this level. So I'll put my TP at 171 1.0750, or no 1.0, that around here, this area where you have this order block. Okay, that's my TP. So let me just mark the order block here, this secondary, this kind of fair value gap, whatever it is, order block. I'm not sure what it is, but I'm looking at that level for TP. So that's a 50% level, which I can literally mark with a horizontal line and actually change the coordinates to the number, which is coordinators or coordinates. We'll put it as 8772. So 72. That will be the coordinates. Yes, that's the TP area. So I'm targeting that worst case scenario. So what am I going to do? On this pair, you see there's a sign that price is trying to push up, creating liquidity just as it did yesterday, and eventually smash it out. So again, I'm going to be looking for this opportunity for price to break out, retest a little bit on this pre-market high, and then I'm going to buy and then get out and sell from there. I could sell from there massively. That's going to be a massive drop. So this is my picture. This is what I'm thinking that could possibly happen. But as long as price is trading below the pre-market low and trading within this area, I'm not taking any trade because there is no clear cut. I needed to come out of there, break out of that level, retest, and I'll buy. So I'm going to look for a long position here. And I'll take my TP there. So guess what? I can literally put my stop loss right below. That will give me 1 to 2. That's safer. Okay. But again, it's not guaranteed. Don't bother yourself what the market is doing around here, except it break out. If there's no breakout, no trade. And if it break all the way down to the lower side, then we leave it. That means it's not going to retrace. That's how you know. You wait for a pullback and then you can take your trade. So this is what I'm targeting to trade on Euro USD. Did you get that? Comment, question? Did you learn something? Let me see. Is there comment? Is there question? Did you get what I just did? Let me see. So the time frame I'm using is daily against 15 minutes time frame. I use multiple time frame, but at the moment I just use the daily, and to just, the left side of it is the daily, the right side is the 15 minutes, 5 minutes. I can decide to do any time frame, smaller time frames, but my overall bias is on the daily. I always look at the daily to make my decisions on the market. Did you get that? Okay. So this is what we're looking at on this pair right now. And GU, let's talk to GU. Let's talk about GU. Now on GU, the same thing seems to be playing out. But the problem is GU is a bit quicker. As you can see, I'm anticipating the same thing on GU because the candle on GU is a little bit bigger. All right, it's a little bit bigger. So I have a trap. If price break be above the pre-market high, then I'm gonna buy. If he's trading within there, I will wait like it is now. You got to wait. There's no sign that the market it might consolidate. But let's look at if we have our news coming in. Okay, Forest Factory. Let's see if we have a news coming in. Today we have news coming in. Let me filter these things. Let's just look at only the red folder, or maybe that one. Okay, these are the news coming in. So by 1:30, we have some retail sales coming in. So price may consolidate before that time. Price may play around before that time. And if price does that, then we will need to wait for the market to for that to happen. Okay, we'll need to wait for that to happen. You just have to be patient. All right, now this might probably be why the market is playing around at the moment. But nevertheless, this is what I'm expecting. A break above that high, and they will look for opportunity to buy. Euro USD is playing around the same zone. They are all playing around the same zone. So there is no open opportunity on these two pair right now. Now you can see that price is struggling to make a decision. But I'm looking at it on the lower time frame for that clarity. If price take out this high, this practical high here, then we are going to go all the way up here. So that means price will come to this order block. So I'm waiting to take a TP on the buy order here, or I could wait for price to come up there and I'll sell. But whichever way, I'm waiting for price to go there. So I'm going to buy the market up there. That's what I'm doing. But there's a problem because of the major psychological level. So price is struggling at this major psychological level, which is not a big deal. The market can eventually rise up and then come back down if you want. But because it's a very massive candle, I'm thinking it may struggle to retrace. And if it retraces bullish, that might be an issue for the day. So I'm watching. And this might also affect Euro USD as well. So again, there's no clear positioning on these two pairs. As you can see, both of them are struggling within that area. So we need clarity. If GU began to drop still and without retracing, because it's going to be a long way for that to happen, maybe the market might do it. The reports that we are waiting for, the reports might make it up, or price might push up crazily before the reports and then sell massively again and close bearish eventually. So this is exactly what I'm looking to trade today to hopefully regain yesterday loss that we had. 2% is what we're looking today, and even more if possible, and we'll be back on. So any question, any comment? As far as I'm concerned right now, the setup is still a waiting game. So we have to wait. And I don't want to really go outside those pairs right now, GDU and Euro USD, because those are most of my favorite pairs. Let's look at gold actually. Let's see what gold is doing. Gold, as you can see, finally hits the high that we anticipated. So gold finally hit the high as a bullish price. So you should have been buying gold every moment the opportunity arises. Of course, we have liquidity here. Price taker liquidity came all the way down, extended it, and then tap into this order block multiple times and then rally. Let me remove the drawing so you can see it. So today, as it is, what do we expect? Well, we can see this is the pre-market high. The previous daily high is obviously there. You can see this was the previous daily high here, and price already tapped into it by creating a wick. That's to tell us that it will still go up. So today, price will still rally up. So this was the pre-market low. Was the previous day low was here, a little bit lower, I think. Where is it? Somewhere here. Okay, this was the previous day low, and that's a way up, like that. That's a long way up. Price already done some job pushing throughout the night as well. So with all of this marked out, so question is, what do we expect? A break above and retest, because at the moment price is trading within the pre-market high and low, which is obviously this candle here. So we have the pre-market high. This is obviously nice because you can tell that the pre-market high is still already above a little bit, which is nice. So that gives us a very good confluence there. So for me, I'm going to be looking at what the market does with that to break above that high, and then we'll continue. But again, we don't want to bother about what the market does to the bottom, except price want to retrace. If it does want to retrace, then we'll get that. Like I said the other time, the candles does not always retrace on a daily. So mark that. Like this one now, you see on this daily, this is the candle. So if I was to look at this daily candle here, you see that was a move. Price did not retrace. Actually, it opened up and just go. It did not retrace a little bit. So you can see it doesn't retrace to downside. So some pairs don't do that. You need to study the pair to know how they behave. So don't go about marking every candle and say, oh, you're expecting a retracement. It doesn't happen that way. You got to be clear about that. You have to understand the pair, study the pair, master the pair, understand how they move before you can make those decisions. But that was my finding based on Euro USD. And also GU also do the same thing because two of them trade almost in the same direction. So now on gold, I'm looking for a break out of this area. Then I'll look for opportunity to buy. The question is, where am I targeting on the 4 hour time frame? Let me go to the 4 hour time frame. Let's see. Where should we target on this trade? As we shrink here and look behind, we see that there are obviously no recent highs at all. So this is the highest high that the market is at right now. So if we think that is on the 4 hour, that's what we have. Let's check the weekly. Let's check the weekly candle to see. Yeah, as you can see that this is the obvious high, the highest high of gold right now. So you have to think psychologically. In other words, think of psychological level. That's what I'm trying to say. So let's look at major psychological level that we can target at this moment. That will be 2,700. I'm looking at 2,700 possibly, but that's weekly. So let's break it down to daily so that we will not be exaggerating our TP. Okay, as it is, we're going to be targeting this level, which is, yeah, it might be close to one. Yeah, we might be close, but I'm thinking 2,700 is a good place. So 2,700, 2,700, that's what we're looking at TP 2700. That's a nice psychological level right there. Okay, we will put our area of TP 2700 now based on the higher time frame factor. So we're going to look at this trade. So this is how you're going to be looking at to buy gold. For those of you that trade gold, you will simply wait for a push up, liquidity grab. For don't forget, remember that. Always go back to the videos and watch them. Liquidity grab, break and retest, and then you buy. Now, this is 1 hour time frame. I'm doing this. You have to go to a lower time frame like 15 minutes to take your trade. So on 15 minutes time frame, you want to see that this liquidity is taking, obviously. And when this liquidity is taking, what do you expect? You want to see the price take out that high, pull back into this area, reject, and then that's your buy. That's your buy. You need to see a price action here. Price action. A bullish candle or bullish hammer candle. You want to see a hammer or something around this place. There must be a price action. You want to see price action. So that's when you're going to get in on the buy. You get in when you see that price action. Now, it depending on the price action at the bottom here to put your stop loss. But mind you, this is gold, okay? So you have to target this low. So this is not a bad trade if you put your stop loss at this low, because that's the pre-market low. So for market to come all the way down here, it means that it's going to retrace. So what you're waiting for is a break of this high, a liquidity grab. It could be a break of structure, whatever you call it. Wait for that to happen and then get in. Do you understand, guys? Do you understand? If you understand, let me see in the comment section that you do. Comment section, comment on the comment section, you do it. And then you want to follow this system. Please follow what I'm telling you. If you lose, you lose. If you gain, you gain. But there's high chance you're going to win. Okay? My win rate in this strategy is about 69%. It's 69%. So I'm not saying that that is good enough, but that is okay for me. I mean, if I take 100 trades and I have 1 to 2, 1 to 2, I'm always in the profit, always ending up in profit if I do that. So it's a well-proven tested system that I know it works. So that doesn't mean you don't have to. We had a loss yesterday. We had a loss yesterday, so it doesn't mean you don't have a loss. You will have a loss. We had a loss yesterday. That was recorded, and we all saw it live. So there was no big deal. And we saw the mistake. Not that we were not right. I want you to notice something. Not that we were not right on our directional bias. We were correct. But price decided to take us out you know, um, by tapping into areas of our stop loss, which was liquidity area. And again, we learned from there. You learn from there. So as you can see, both of them are really struggling to retrace this time. So based on what we see, we need to be careful that this buy may not hold. So price may drop still. So when we want to see that price break this pre-market low, and then we'll be looking for alternative. That is how you trade what you see. You don't just think the market would obey everything you do. You trade what you see. Now you see the reason GU is the one causing this whole havoc on Euro USD as well. So this is what is going on here. But I'm anticipating that they will break out of it as soon as it's 10 o'clock. I should be expecting that to happen, and they will rally up, and we'll see. Okay, I think that's what we're looking to trade. So there are no setup right now that is valid for us to get in. So don't um don't sweat it. Don't sweat it. Okay, we will wait for the opportunity to present itself, and then we'll get in. At the moment, like I said, not every candle will retrace. So depending on the condition of the market. But at the moment, we can tell that the price is breaking below the pre-market low, pre-daily low, and we want it to break below this pre-market low. Once it break this one, If it breaks the two and close bearish, that's it. We're going to sell. Now, we're going to sell based on market structure, based on price action. We are not just going to sell like that, because we will have to anticipate what the market is doing. And then we will target a psychological level, which we anticipate that price will get to uh, in the next, which is 1 8. Let me, we might target, this is daily time frame. We might target it's 200. So again, that is achievable, but it's a long drive depending on the pair. So let's say we will target about, because there is no obvious other low that we can see that is there right now. Okay, there is. So we have this low. Beautiful. So we could target this low. So that's a long way down. So the best case is to mark this high as well, this market high on the daily. Okay, that would be the market high. So we should anticipate price action there as well. So now, having marked that area, I'm anticipating price action there. So that area will be somewhere here. Okay, that's the area. So we should be anticipating a TP around this area. Great. So depending on the condition, if the market decide to drop and just continue dropping, so if without retracement, then we need to wait for a break of this low, a retest, and then we'll drop it. We'll take it down. Otherwise, we'll wait. GU right now, even though it's a sell market, but it's not acting like that. So I still feel if GU break above this high, then Euro USD is going to comply. Euro USD is going to comply as well. But at the moment, all of these jargons is a waiting game. So you wait. I think that's it, guys. At the moment, the setup for gold is warming up. Get ready for that. As long as we are buying gold is a buy market. We just keep buying. Yeah, it's pushing up. It's broken the high. So all of this is just consolidation. They will push up, rally, and then you get in. So those are the pairs we're looking at today. We don't want to look at a lot of pairs we have, except you have a special pair you want to trade. Let me know on the comment section if you have a pair that you want to trade and that you're looking at trading. Let me know in the comment section, then I can look into it. Commodities. Yeah, sometimes I do trade the indices, like what do you call it, SP 500. I do trade that sometimes, but for a while SP 500 has been very, very choppy. Nice one. I was waiting for that possible breakout too, or if it is didn't break out. Okay, for the gold, are you talking about the gold, Femi? That should be the gold, right? All right. What pair are you looking at, guys? Let me know. What pair are you looking at? What pair are you looking at? What pair are you looking at? Oh, that that pair, GJ. Okay, let's look at GJ. Somebody requested for GJ. Michael George, is that what you trade? Let's look at GJ. All right, GJ. Where are ya? Sorry, that's not GJ. Okay, this is GJ. All right. GJ has been struggling, being a consolidation for a while. So I won't trade this pair right now. I won't do it. I won't do it. I won't do it because it's in a phase that is zap. This is not nice. I don't like that kind of structure. When I see things like that, I run. I run from that pair. There are multiple pairs to look at. I wouldn't trade that at all. Look at that. I wouldn't trade that at all. This was the news, this candle. And then came, retrace, drop a little bit, and it's playing around. So the question is, what is it doing on that candle? Retracing. So if you're going to sell it, I don't think it's a sell market, it's a bullish market. So I wouldn't even say don't to sell it. You have to wait for clear direction. The market must break above these highs. So you need about next week, from now to next week, to look at this pair. Don't trade this pair till next week. That's what I would tell you. I don't. It's up to you, depending on how you trade. But personally, I wouldn't trade this pair till next week. I need a breakout. They must take out liquidity either to the upside or to the downside first before I will trade it. I need to see that happen. If they don't do that, I'm not gonna take it. So sorry, bro. I can't do further analysis on this stuff. It's terrible. Any other pair? Anybody? Any other pair? Quickly before we shut it out, we're gonna be stopping the live stream by 10 o'clock. So it's just 1 hour live stream. I don't want it to be long so that people can watch the video and learn. Yes, any other pair? BT. Listen, Bitcoin, I don't know why. So that I've already done GU, bro. Have you not been paying attention to that? I've already done. Maybe you just came. I've already done GU, so I'll go over it again before we end the stream. Okay. Let's see. Bitcoin. Let's see. Of course, Bitcoin. Let's see. We're gonna bring it in. I don't have it on my watch list, so let me bring it in. Okay, there is BTC USD. I'm not sure if this broker is the right one, but I will just I'll just add it. I don't know what broker do you use. I don't trade it, so you let me know if it is the right one. All right, BTC coin. This is nice. We can see that price has been playing around. Obviously, I think this is obviously the highest high. No, not yet. Okay. Now we see another block here on the daily. Let me stretch this out so you can see. This is the daily time frame. You want to look at breakup structure first. We have a breakup structure to the upside, but there is another block. Okay, and we see that this was the recent structure. You need to look at swing highs and swing lows. So we see this was a daily recent structure, as you can see. What would I use now? What would I use? Okay, let's use this one. So we have first the market trended low. Okay, this is daily. I'm just doing daily analysis. Watch me now. This is just daily. I'm just doing daily analysis. Okay, I have not I'm just doing a top-down analysis for now. So let me use order flow box. So we have price drop like this and broke this low. So we were bearish for a while. So what do we expect? Price retraced. As price retraced, it got to this level. So if you notice, price retraced all the way to almost 88%. Okay, almost 88% of the fib, and then drop. Okay, so that was a massive retracement to the upside. Clinically, because people were taking out. People sold here and then they got their stop loss hit. Other people sold here and then a little bit extension, get their stop loss hit, and then it dropped. So look at that. That drop broke the previous low. See, it took out this low. That gave us a structure there. So it means we have a new drop of this low. So the new drop is now here. So this now become the new lower, higher low, lower high and lower low. Now, if you stretch it out, what do you see? That's what we see. We see that this high has not been broken, this low has not been broken. So what is all of this? This structure. These are retracement to the upside. So you don't consider this to be breakout structure. This is microstructures. These are just minor structures in the market. So the market is still overall, okay, retracing into a bearish momentum. Is struggling to maintain that bearish momentum that he wants to start. But you see, the whole picture is clear that this liquidity was tapped into. We have this rally up. Okay, we could say that the market is strongly bullish if we're to look at the entire picture there. Okay, now look at this. Let me use this feed. You see this level, this swing high. Okay, that is a bigger picture. So if I'm looking at it overall, the bigger picture is Bitcoin is still a little bit in consolidation of a bullish retracement. So that's the way I would say it. But in reality, this consolidation, okay, that you see may have come to an end when price took out this liquidity level and rejected. As you can see, it tapped into 60, 61 and rejected, rally up by pushing up. So the question is this still bullish? Of course, overall, the market is bullish. But if you look at the way the structure is, it created a lower low, a lower high, and then now retracing back. So for me to look at any possible trade right now on this pair, I will wait for it to break this high. That's the condition. I will not trade until it breaks this high. You see, until this high is taken out. Once this high is taken out, I will target minus 27. Remember that. I will target $84,000 for Bitcoin. Is it 84,000 now? That's terrible. For one Bitcoin, you have to pay 84,000. That's terrible. Hey. Okay. So he had to break above this high 69,829. He had to break that high. If he breaks that high, then I know we're targeting the next one. We're targeting the next one. So that will be a proper change of this lower low that he created in respect to this overall bullish momentum. We should still be looking at bullish momentum, but it appears that it's creating a downtrend. That's why I said you have to wait. It appears he's doing something like this. You notice he's doing that curve, that arrow, that's like a flag. Okay, it's creating like a flag pattern. So we need to see a breakout to the above. Once you see that breakout to the above, then you can continue to the upside. So at the moment, of course, we can see a breakout already happening, a retracement coming in there. We see that breakout of that flag, but it's not clear yet. So that's why I said wait for this high to be taken out. If price push higher and take out the high, then it's clear that the market wants to start rising on Bitcoin. But at the moment, I will wait. If you go to the weekly, the same thing. It's shopping market, as you can see. You see the flag? It's so clear on the weekly. You want it to break out so that it continues. If it doesn't break out and continue, you will be trapped in this consolidation, and I don't want you to do that. So as you can see, the weekly time frame is very clear in looking at this. All right. So yeah, at the moment, no. Let's look at GU again one more time before we go. And Euro USD one more time before we go. These are the two pairs. Okay, we can see that GU, like I said, the weekly candle is bearish. I mean, Euro USD, the weekly candle is very strongly bearish, as you can see. But the daily is also where we are looking at directional bias. So we want price to give us a confirmation of what is going on the daily. As you can see, the daily is still dropping. So we're targeting this area. So if it breaks below, which is already breaking below the previous daily low, and we want this area where it's consolidating now, that price should break that area. So if price will break again another candle, then we'll wait for a pullback and then we're going to sell. It means that the market is not retracing. So that's what we're waiting for. And on GU, yes, the GU market, like I said, this candle is so massive that it's gonna take them really a reversal of the market to fill up that imbalance. It's a massive big candle on daily. So I doubt if they want to retrace up to that level. I doubt it. So for that reason, we'll wait for a sell. A break of this pre-market low, a break of this pre-daily low, and then we'll look for a pullback and then we'll trade. So that's what we're looking for. But at the moment, they are not ready. So wait. The next one was gold, which I did gold. So gold is consolidating right now. For those of you that trade gold, we're waiting for a break above this high, and then we're going to take our entry. Gold is bullish all the way. So we're going to look for a break, take our liquidity, push up, retest, and then we'll buy. That's what we're looking at. These are the pairs we're trading. I hope you guys enjoyed this section. If you have a question, you have 5 minutes to ask. And let's take some questions and answers in 5 minutes. Let's go. Questions and answers in 5 minutes. Come on now, talk to me. Send it into the comment section for those of you live watching. Can you analyze today's news and how they affect the market? Yeah, you learned. Go and watch yesterday video. You want me to do it again today? Go and watch yesterday video. I already done it yesterday. That's why I did yesterday video. Watch it and you do the same thing. It's the same thing. Okay, it's the same thing. Watch yesterday video. You'll be able to do it. That would take me like another 15 minutes to conclude. So I don't want to get into that right now. Trust me. Any other question? Any other question? So Uzoma, I hope you got the GU analysis, yeah? Okay, I'm waiting for that in 5 minutes. So while we're on that, I've been creating expert advisors and I'm back testing them and also testing them on a live account, on a challenge account. So at the moment, the market is choppy. So most of the expert advisors have not opened up. But I could show you statistics of what um what the stuff has been, my back test and the win rate of the back test of 1 year. If you want me to talk about that on this very stream, let me know on the comment section. Otherwise, we can talk about it on another stream. So let me know if you want me to talk about the expert advisors and how you can. I'm not talking about buying expert advisors. I'm talking about understanding how to code expert advisors and use it for your advantage. And also, you can, of course, you could buy what works. If it doesn't work, don't. If you have to know that it works and how it works for you to buy it. As far as I'm concerned, most expert advisors um, MQL5 language platform is 80% of them are garbage. And for you to find the original, the good ones, it is not by price, but that's the bad thing that they do. The marketing system on that platform is terrible. The sales, the reviews, everything is manipulated most largely, and it's very bad. It's very bad, very very bad. So for those of you watching this video now, hit the like button, subscribe, and turn on your bell notification because we might be coming on anytime. And also expect more videos on how to use expert advisors. For those of you interested in expert advisors, EAs, okay, EAs. Let me show you. Ooh, look at that! Did you see what just happened on that gold? Did you see what happened on gold? Did you see that drop that just happened on gold? So I'm thinking, where's it going? Is it retracing now? Is it coming down to retrace? That might be it. If it's gonna retrace, then um, let's quickly look at it. But I don't think you should sell the market. Please don't sell gold. Gold is, except there's a clear directional bias to sell it. Don't sell gold. Just leave it the way it is. Trust me. Okay. There's one more thing I want to talk about before we go in 2-3 minutes. Which was the expert advisors I remember. Okay, yeah. Thank God. Look at that rejection. That's clean. I like that rejection right there. Look at that rejection. That's clear that we are in the right course. It shows us that we are in the right course. I like that. We're doing the right thing right now on gold. I'm expecting to take that trade on gold. Let's talk about EAs. Okay, let's look at the EA aspect of it. Firstly, let me go to um, some of the expert advice I've created, and then I will show you the platform that I used to build it. I built it myself, so I conditioned it myself. Then when I show you the platform later on, you can go and take advantage of it. But let me show you the expert advices that I've built so far and their results. So let me quickly stop. Let me share my screen on that. Let me share my screen on that, which will be da, 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 da. Where is it? I can't get the tab. Can't get the tab. Okay. Sorry guys, I'm trying to get access to my MetaTrader. It's not letting me. So except I have to share the entire screen, which will be very blurry. So let me see. Let me see. I think what I'll do is just quickly upload some of the results. So I will share some of the results with you so you can see the ones I have here. Sorry guys, just give me a sec. It's because I'm using my laptop upstairs here. So let me see. Maybe if I share, I'll stop sharing this and I'll get it back or something. I'm not sure. It's not letting me to pick the MetaTrader itself as a window. I wanted to share that. Okay, let me share. Let me stop sharing. Hold on. I'll stop sharing and I will share my entire screen again. Let's see if that works. Okay, because that's the only one that will works. Okay, let me see that. Hold on. And I will bring this up. Can you see this? No, you don't. So let's see this. Okay, good. Ah, nice. Okay, let's look at this one. Okay, this is a MetaTrader. All right, I'm gonna do some few tests. I have these are the expert advisors I've created for the time being. So let me just do a back test on them, each of them. Okay, you'll see. And I'm gonna run a test on any of them. These are the ones I created by myself. I've created some, but these are the best out of them so far. I've created about These are the expert advisors I've created so far. One, two, three, four, five, six, and seven. These ones are just not really what I wanted. So seven of them, out of seven of them, I have one, two, three, four as coming out the best with results. So let's start with the bottom one. So with the bottom one, we're going to test. Okay, let's go to this area. We're going to test the crosses. I call them the crosses because it's strictly based on this, what you see on the screen right now, the moving average. So let me show you what happened here. So this, I'm testing it on New Zealand card because that's the pair, and also Euro USD. Those are the two pairs that work best. 5 minutes time frame. 5 minutes time frame. So I'm testing from 2024 February of this month of this year to last month. Okay, that's a test, and I have $25,000 based on probably proprietary frame or anything you want to use, and then I have 1 to 50. So everything is set, every tick. So I'll come to the inputs. So this is a setup. This is the input right now on it. This is the input because um I have created two set files for it. One for this is the one for that, and one for Euro USD. So I'm using the one on 5 minutes for this particular one now on New Zealand card. I want to show you what happens. Now look at it. Stop loss is 29. Take profit is 19. Yes, it's not a good proper risk to reward ratio, but trust me, it's an amazing system because of what the result would be like. And we have the three moving averages, simple moving averages that we're using, three of them. And we are risking 1%, 1% per trade. Maximum trade open is 1. So everything is just simple. It's not complicated system. I like it simple. I like to do simple system. So somebody will say, okay, what about news and every other thing that will affect the market? That's why you're using this kind of stretch, this kind of moving averages. They are massive. Look at that. The slow moving average is 422. When did you ever see a manual trading that the moving average is 422? Is rare, right? So we have we have two slow moving averages, and they are based on the conditions. So we have 128, and the fast moving average, which is the smallest moving average, is 23. So this is how the mechanics works. Now, this is just the simplest one of the whole thing based on indicator and moving average. Still simple moving average, not exponential, but simple. So what I do is just to test. Oh, my time is up. So let me quickly do this. What I do is now is to hit the test button, and let's see the result. Oh, stop. Hold on. Let me stop it first. Let me go back to visuals because some of you like to see what is going on. All right. You like to see what's going on. Let me show you visuals. So this is a visual. Watch. Okay, let me slow it down. Already the price has moved from 25 to 7,000 plus. Already we are in profit already massively. But let me see if we're going to catch another exit. And look at that. Let me pause that. Did you see that? It had a sell when. Look at the big moving average. Remember this book 422? And then when did he open a sell? Here. What happened? When the 23 crosses the 128, okay, because both of them are below, you see the condition, 422. As long as the price is below 422, every crosses to the downside, when this one crosses low, is going to sell. So if it crosses above, it will not buy as long as price is below this level. So watch out. Look at the stop loss. Stop loss is above there, and look at the TP. Did you see that? One trade at a time. This system is profit proof. Profit will not even flag any problem with it. They don't have issue with it. In fact, they don't even know whether they are using a robot or not, because the way it's coded is very simple, that you, whether you put it on a trading, you're trading as a expert advisor, they will not even know, because the algorithm is so simple that it's like a manual trading. They can't tell the difference. So look at it now. Let me play on so you can see. I just wanted to show you the condition there. Did you notice what happened? Let me show you what happened there. Oh boy, stop. Let me show you. Price was very close to TP because of spread. It did not activate. So price eventually closed a loss. That will happen when there is so much spread in the market. So you need to check the spread, because based on this trade, the maximum spread is three pips or so. So that's why it had that. So let's continue. Oh, it's too fast. Let's see another trade. Let's see another trade that will come in. We are still in profit. 25,000 has turned to 27,600. We're still in profit still, so there's no alarm. Remember, the stop loss is bigger a little bit than the TP, and yet it's still profitable. I wanted to show you this quickly. Now, that's a buy trade. That's a buy trade going up. TP smashed. Another buy trade. Remember the condition? Price is trading above the. Oh, TP smashed. Crazy. Another buy trade. Another TP smash there. As you can see, that's a TP smash. Another buy trade is coming. Let's see if there is. If a cross happened, then yes. Another buy trade. Oh, this one is almost hit a stop loss though, because of that news impact. That's news impact. So yeah, this one will hit a stop loss. Yeah, stop loss, because it's already crossed. That news impact did not work out. We are in 28,000, 3,000 plus already in the market. So let's see how quickly we cash this. Oh, my battery is low. Hold on there. Hold on there. This is just one of the expert advisors. That's a TP smash. As you can see, another TP smash there. Nice one. Again, another TP smash up there. So more TP is hit than stop losses. That's the advantage. That's a buy trade, but this is going to hit stop loss. Okay. That's another buy trade. Again, this is going to hit stop loss, I think. Yes, stop loss, because it's choppy. When it bought, it's choppy. So price dropped to 27,900. So we had two major loss there. Is a set trade, another stop loss hit. Almost. So this one is going to hit TP. Oh, it's playing around. Oh, stop. Yes, TP smart. Oh my God, very close. Okay, sometimes I'm watching it and say, why is this like that? Almost close is rejecting. So that's the pair, because of the pair. So this is another set trade. So you can see, if we speed up the whole process, let me just speed it up. You will notice that we actually ended a good profit. Not that bad, about 5,000 plus. So let me show you something about this result. So if you come to the graph, this is a chart. You see how it like. This is how a normal, a normal, reasonable expert advisor should be. The one that you just see something just tiny, just straight all the way up is bad. That's terrible. Don't go there. Let me show you the report, the back test. Look at it. What I will point to you is very simple. Let me upload. Let me just download it. This report. Let me download it so you can see on Explorer. I think that's one of them. I'm not sure. Save, replace. Okay, it's opening. Good. Let's analyze it here so you can see. So we are analyzing it here. Look at it. We tested on 5 minutes time frame. This is the pair, and this is the length of the period we tested it, about 6 months. So 6 months interval. Okay, so we have the stop loss, everything is given, the parameters of the EA, everything is there. So I want you to notice something. This is the leverage, 1 to 50. Leverage is 1 to 50. But look at this. Look at this condition here. All right. Look at profit factor, 1.4. Nice. A minimum you want to see is 1.2. A minimum is 1 to 1.2. Anything above 1.2 is nice, is a good system. That's very good. Now, quality historical data quality test is 100%, which is great. I don't really follow that. That's not my take. I don't really go about that. But look at relative balance drawdown in every given trade. So we find out that the relative balance drawdown was 3%, which is good. So it's profit proof. You can't have a daily drawdown that is less than that. That's what it's telling you. So we can also look at recovery factor, which is very important. Whenever the trade has a loss, how quickly does it recover the loss? It tells you that it recovered the loss 4 times. If you lose one trade, it will recover the loss 4 times. That's an amazing thing. I like that. So it recovered the losses 4 times in a loss. So if you lose one, it will recover that loss 4 times. So that's why I'm not bothered that the TP is not equal. The risk to reward ratio is out of place somehow, but it's still profitable. Now, total trade was 100, and now a minimum test you want to have is 100 trades. So based on this test, we had 139 trades, which is good pass mark of a test that you want to have. Now, let's look at the results in this area. And you see that I'm going to look at this area, profit trade. Look at profit trade, percentage of total. That means all the trade in profit. What is the percentage? So this is what we call the win rate. The win rate out of 139 trades, it had 96 trade won. 96 trade won. Look at to the right. It lost trade total percentage, 43 trade losses. So if you remove 43 from 139, you will have 96. Total trade that was executed is 139. And then we find out that 43 was a loss out of that. That is an amazing thing. That is an amazing out of 130 something trades. So first of all, we find that the win rate is 69%, which is nice, almost 70%. So for this, is ready to go. It's ready to go for a challenge pass, a challenge trade, whatever it is. So that's why I'm putting it up. Now let's look at the chart. This is a curve. You see, nice, no problem. There was obviously a moment where price was flat, nothing moved, and then it rises again. Some days and weeks that you will not have movement, like now, the market is choppy. That's why it's giving us this. So again, we still end up profitable. How did we know that? These are the months that were tested. February was profitable. March was profitable. April was profitable. And then May was like a slight profit, almost break even. The next, June was profitable. And then July was profitable. August was profitable. September was profitable. Now, this is profit and loss by week. So throughout the weekdays, every day, on Monday of it, based on the trade calculated, there was a loss. But the rest of the day was good. So what that means is you can decide to start opening the trade from on Tuesday. Put the expert advisor on Tuesday based on this pair. You put the expert advisor on Tuesday and start trading. And that's what it is. So there's a lot of information. As you can see, the holding times, minimum position holding times. So anything below 72 hours, anything below 13 hours, I think, then we have price more in this area of 21, within 21 minutes or so. I'm not sure what that means, but within that area, these are the hours. So we have shorter time execution because it's 5 minutes time frame. So these are all the trades. So that's a report on that particular pair. Only one pair. If I do the Euro USD, that would take another long time. So I just wanted to show you that you having interest in it, you have to learn to build. Okay. Sir, make drop at before buying at the New York. Okay. Yeah, I think so. Let me see. Let me see what you mean. I want to share the screen better now because boom, 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 boom. Yeah, that's what I thought. So is dropping. That's why you say you have to set a guard. You have to set see, protect yourself before you take decisions. So now we can see that is happening. We have a break to the pre-market low. So we need a retest. So the question is there a structure? Yeah, a break of minor structure here. We can still see this structure here as well. So we have this one. So we can't wait for price to come all the way down, except it's just keep dropping, which is fine. So price may come to 50% of that. So let's look at this. Let's see here. This is the previous daily candle, and we're looking at good. 50% will be somewhere there. Okay, this is 50%. So again, these are liquidity areas. So let's mark that area that they are attracted to this liquidity zone. If they come down, okay, liquidity right there. So that means there's another block here. So this is the area you should be looking for possible TP. All right. So let's say there's another block here. Fair value gap could be somewhere there, but this other block might be the area we're looking at for TP. So price may come into this other block and reject. So we look at that. So if you want to sell, then you by all means do that. But I'm not going to sell gold. I'd rather wait for price to take out liquidity, let it drop the way he wants. But if you want to sell it, this is the opportunity to wait for a retest, a break and a retest, and then you can sell. But wait for a buy, New York section. The market may rise from here and then continue to the upside, and then pull back a little and then continue. So depending, this high must be taken out today. So depending on how the market wants to roll, you choose which one do you want to trade. You want to trade the retracement against the trend and then sell, or you want to buy with the trend. That is up to you. So wait for price to retest this pre-market high if you want to sell it. If you keep dropping and then break structure, the same thing, you will still have to wait. Without taking out the liquidity, you will still have to wait for a pullback and then you can sell. That would be better of risk to reward. because you have a clear cut that a break of structure has happened, and then price want to start selling. So we wait for that. But at the moment, don't just jump in. Don't. That's not how you trade. You don't just jump in. You have to set areas of interest. So this is what you would do. Put your stop loss right on that high. That'll give you 1 to 2.6. Wait for a pullback into that area. Look for price action rejection or something. There must be price rejection. Immediately you see that price rejection, jump in. As long as it's not less, it's not more than 1 to 2 risk to reward, is a good one. So that's what it is. And then when you get here, get out. Don't even wait. Just get out. One price, get here, because it's going to retrace back up. It's going to start pushing up. Okay, that's for that. Let's see what Euro USD. Euro USD is still playing around there, crazy. GU indecision still, yeah, crazy. So it's only got gold that is moving right now. The rest of them are stuck. So again, based on gold, wait for break. I think if this candle close right now and there is a pullback, that's an entry for you. Don't wait for any confirmation. Just wait. Let it, if it this candle close bullish, I mean bearish, and then it pulls back into that area and it rejects. It rejects at this price level, then get in. That is a set. I'm still going to be watching it, but I'm out of time now. I have other things to do. um I hope you guys enjoyed the section. What do you think about the expert advisor? Let me know in the comment section, and I will follow up on that. Whatever you say on the comment section, I'm going to act on it. So let's see. Some of you will have to test it, but I'm already testing it. So it's the result we want to see on a live trade, a challenge account. You can put 10K account on it. You can put 5K account on it. Challenge account, leave it there, let it trade. Use the two pairs, Euro USD and uh, New Zealand card. Put those two pairs there and see what the market does with it. Crazy results that it came out of. Both tests, they were not like, in fact, both of them, one was 71% win rate, the other one was on Euro USD. We have 71% win rate. On the other one, we have 69% win rate after testing over 100 trades, consecutive 100 trade tests, which is good for me. That is a balanced expert advisor for now, based on the market. At least for 1 year, we're looking at a minimum of 6 months to 1 year test, and that can free your time, free your emotions from the market, really. For those of you struggling with your emotions, and obviously you're tied to the trade, so can give your time, yourself some time. And that's what I'm planning to do. I'm building an arsenal of expert advisors and load them up like a machine and walk away. Walk away. I have other things to do. I have life to live. I have family to take care of. I have businesses to run. I have a lot to do. So I'm not going to be sitting all the day or chat like this. Trust me. I can do analysis. I am still going to be doing my weekly analysis. I'm still going to be looking at the market. I'm still going to be doing once in a while. If I'm free, do all this can be still done. But once I have the system put in place like that, it will reduce the struggle and the stuff. We are going into an expert advisors environment, so everyone, what do you call it? AI has come into the scene, so that's what is going on right now. So you have to be smart and join the log. All right, let me see. There's comments, questions. Okay, you're not seeing the chat. Oh my goodness. Sorry, man. It's because I'm running off. You're blocking the screen. Show screen. Are you seeing it now? Sorry, oh my guy. It's because I'm using my laptop. I can't see most of the time. I'm off it. I can't even see. Okay, you can see the screen now. This is my analysis. Breakup structure on gold. This is what you're looking at. Sorry, guys. Can you see it now? Sorry. We should have another time and use live challenge accounts. Yeah, we'll do. We'll do. We'll do that. Okay, guys. I think that's it for today because I'm not gonna leave. Gold is still. If you break that structure, break that low, then we got it because the way it's dropping now is gonna break that low. So we need a pullback into that area, and then we're gonna sell. We're gonna sell gold a little bit lower, but at the moment, I'll wait for a pullback, and then we can sell it. So that's it for today, guys. I hope you enjoy yourself. I'm gonna see you on the next one. So endeavor to leave a comment, questions, answers, whatever you have in the comment section. Follow the link in the comment section if you need more detail on how I trade this strategy. Follow the course, take the course, and join us on our Telegram group. All of the links are there. You know where to find me. Um, all right. I'll see you guys again when I come live. Bye, guys. Thank you so much. Cheers.